All right, let's get right into it. For what feels like forever, the story of China's property market has been just one thing: crisis. Prices in a free fall. But now the question everyone's asking is, are we finally hitting rock bottom?
And just to give you a sense of the scale here, look at this number, minus 41%. That's the drop for secondary homes from their peak, according to the Iceberg 40 City Index. I mean, that's a massive wipeout. It basically winds the clock all the way back to 2016 prices. Just incredible.
So, yeah, after a crash like that, you've got to wonder, right? What happens now? Is this it? Or are we just catching our breath before the next plunge?
Well, believe it or not, a new report from JP Morgan suggests there might be an answer. They actually had an expert from the Iceberg Index, the guys who track all this data, on a call. And what they said is huge. The big takeaway? We might be at a serious turning point.
And that brings us to the first big idea in their analysis. The whole argument is that the vibe of the market is changing. It's shifting away from that feeling of just, sheer panic and into something a lot more stable. A gentle slowdown instead of a sharp fall.
And this right here, this is really the core of it. The expert says, and I quote, "This year is a turning point. We're seeing prices shift from a sharp decline to a mild decline." Okay, so sharp versus mild, what's the real difference? What does that feel like for buyers and sellers?
Well, it's pretty much night and day. A sharp decline, that's the panic we've been living through. You've got sellers desperate to get out, slashing prices left and right. But a mild decline, that's totally different. You start seeing confident buyers come back into the market. Listings aren't flying up in a panic. Things just feel more balanced. The whole psychology of the market is changing.
Okay, so that's the theory. But talk is cheap, right? You need the data to back it up. So let's dig into the actual numbers behind this potential shift.
So what are the actual signs that things are thawing out? What does the data say? Well, the report points to a few really key indicators.
First off, and this is a big one, people are actually buying houses again. Sales volume is up. If you look at 20 core cities, that sales peak we always see after the Chinese New Year, well, this year it was 15% higher than last year. That's a huge sign. It's the most basic signal you can get that confidence is starting to come back.
And it's not just that one number. We're seeing other positive signs too. For one, the number of listings is stabilizing, which tells you people aren't rushing to sell in a panic anymore. Plus, those negotiation margins in the big Tier 1 cities, they're getting smaller. And the conversion rate, how many people who view a home actually buy it? That's going up. So buyers aren't just window shopping. They're actually pulling the trigger.
Okay, I just mentioned negotiation margin. So let's quickly break that down, because it's super important. It's basically the gap between the asking price and what the house actually sells for. When that gap gets smaller, it means sellers aren't so desperate. They don't have to slash prices to make a deal. And that is a really strong signal that the market's getting its balance back.
Now, to really see what these national trends look like on the ground, the report zooms in on one key city, a city that's basically acting as a test case for the rest of the country.
And that city is Shanghai. What happens in Shanghai often gives us a preview of what's coming for China's other big property markets. And right now, what's happening there is, well, it's pretty interesting.
And this is fascinating. Check out who's actually driving this comeback. It's not the high-end luxury market. Nope. It's the entry-level stuff. Homes under 3 million RMB now account for a whopping 60% of all sales in Shanghai. We're talking about first-time homebuyers. They are officially back in the market.
And just look at the data here. It's not just that more of these homes are selling, their prices have actually started to rebound. You can see positive growth in the last month and the last 3 months. So their value is actually recovering, which is a huge deal.
So the question is, why this part of the market and why now? Well, the expert calls it an undervaluation recovery. The idea is pretty simple. This segment got hit the absolute hardest. Prices fell so far, so fast, that they actually started to look like a good deal again. And now buyers are spotting that value and they're jumping back in.
Okay, so we've seen Shanghai is leading the charge. But what does that mean for the rest of China? Let's zoom back out and look at the national forecast. So here's the predicted timeline. The expert thinks this mild decline, about 0.5% a month, will probably continue across the country until the end of this year, around Q4. Then, that's when we hit the bottom. The total drop from here is expected to be less than 10%. And after that, the forecast is for prices to just stay flat all the way through 2027.
And if you look at the other big cities, it's a pretty similar story.
For Shanghai, best case scenario, prices are already flat. Worst case, maybe they drop another 3% this year. As for Beijing and Shenzhen, they might have a little further to fall, maybe another 3 to 6% before they also find their bottom.
So there you have it. All the data seems to be pointing to a market that's shifting from an out-of-control freefall to more of a controlled landing. A bottom might actually be just a few months away. But here's the real question, isn't it? Is this the real deal, the start of a real recovery, or is this just the eye of the storm? That right there is the billion-dollar question.